Will home prices increase as mortgage rates decline in the Silicon Valley real estate market? This is your December 2023 Silicon Valley Market Update. Philip Ma here with eXp Realty. In this video, I'm going to provide an update on mortgage rates and the latest Silicon Valley real estate market data through November. Then I'm going to cover a couple of case studies of recent sales that I've been following in this market. And finally, I'm going to address this question of whether home prices will increase as mortgage rates decline in this market. Now, if you're finding value at any point in this video, don't hesitate to hit that like, subscribe, and bell notification button. Let's do this. Let's start with an update on mortgage rates. You can see that at the end of November, the 30-year fixed rate mortgage was at 7.22%, and it had been declining for 5 weeks in a row. So it had reached a high at the end of October, early November, and now it's been on the decline. Over the past couple weeks, it's gone down even further, with the latest news of inflation seeming to come under control and the Fed announcing that they will pause rates and probably will start cutting rates next year. As of the time of this recording on December 14th, the 30-year fixed rate mortgage was below 7%. And you can see here that the forecast from major players in the mortgage industry is showing that rates are projected to come down over the next year into the mid 6% range. I also want to show you what's been going on in the stock market with inflation and coming down, mortgage rates coming down. The stock market has been going up, and in particular, the NASDAQ 100 has been doing very well. Now, the NASDAQ 100 mostly has high-tech companies, many of which are either headquartered here in Silicon Valley or have major operations. This would be your Apples, your Googles, your Metas, your Amazons, your Nvidias. These companies have really been on a roll. And you can see that they're pretty much almost to the level that they were 2 years ago when the NASDAQ hit an all-time high. Now, this definitely has relevance to the real estate market. Having lived through past cycles here in Silicon Valley, I can tell you that when tech stocks are doing well, it tends to have real estate prices going up. People are wanting to buy a bigger house perhaps, or they just want to take some money off the table and not have so much in their company's stock and invest it in the real estate market. So keep that in mind as we go through the market data. All right, let's take a look at our data through November for Santa Clara County and San Mateo County. The median home sales price in November went down from October to about 1.7 million in Santa Clara County and just over 1.7 million in San Mateo County. Now, this could be partially because of seasonal slowness in the market. However, recall that mortgage rates were peaking at the end of October, early November. So those high mortgage rates most likely had a dampening effect on demand and prices. Average days on market was up a bit in both counties, and the sale to list price ratio was down a bit in both counties from October to November. The number of sales as well as the number of new listings declined in both counties. And you can see that the months of inventory was either flat or slightly down In San Mateo County, it was down to 1.6 months. Both counties well below 2 months of inventory. So supply is still very tight, even in this high mortgage rate environment. Before we get into the case studies, I want to share this quote with you. It's from a recent market report from Zillow. Despite mortgage rates reaching 23-year highs, low inventory levels are spurring surprisingly strong competition. Depleted inventory stocks are gradually recovering and price appreciation is slowing, but demand has remained resilient and attractive. Appropriately priced listings are moving quickly. Again, this quote was before that decline in rates that we saw over the past few weeks. But keep these words in mind as we take a look at these case studies. The first case study is a single-family home in San Carlos. It closed escrow on November 17th, and it was on the market for just 10 days. It's a 3-bedroom, 2-bath, single-family home with 1520 square feet. It's in the El Sereno Corte area, very nice neighborhood, close to downtown San Carlos, very walkable, and with highly regarded public schools. It had been completely remodeled with high-end finishes. It was ready to just move in and enjoy and have just a modern home. The original list price was at $1.798 million, and it ended up selling for $2,050,000. Now, that might seem like it was great for the seller. However, there's more history to this listing. It had been listed in the mid-August timeframe at about $2.35 million, and that was when mortgage rates were high. The seller wasn't getting the price that they wanted, so they lowered the price to 1.98, just under 2 million, and they still weren't getting the price they wanted. So they took it off the market in mid-September, and they decided to pause for a bit. But they did relist it in mid-October at 1.798. So they went quite a bit lower, hoping to generate a lot of interest and hopefully multiple offers. Well, that's just what happened. They got multiple offers. I hosted open houses for the listing agent over 2 weekends, and I was just inundated with interested buyers coming through the house. So the low price point really generated a lot of interest. Again, it's right at about the median home sales price for San Mateo County, and the house ended up selling just over $2 million. Let's look at a second case study. This is a single-family home in San Mateo. It closed escrow on November 16th. It had been on the market for 12 days. It's a 5-bedroom, 4-bath, 2420 square feet, built in 1954. It's in the South Shore View area of San Mateo, very close to the water. And it had been recently remodeled with new flooring, new finishes, fixtures, countertops. It looked very nice and ready to move in. And a unique feature of the house is that it had a primary bedroom and a kitchen on each floor. So it was essentially like a duplex. It also had a separate entrance to the second floor from the outside of the house. So it could be lived in like a duplex where you could have different tenants occupying each floor. And so it had that flexibility. It was originally listed at $1.595 million, and it sold for $1.65 million. So it sold over asking price. But again, this was the time period of high rates. And I'm pretty certain that it could have sold for much higher if we had been in the current conditions with rates on the decline. This house sold below the median home sale price for San Mateo County, and it's got a lot going for it, a lot of square footage, a lot of bedrooms and bathrooms, and like I said, the flexibility to treat it as a duplex. Back to the original question. Will home prices start to increase as mortgage rates decline in the Silicon Valley real estate market? Well, if you look at the demand side of the picture, even when interest rates were really high, at the highest level in a generation, demand remained relatively strong at the median price point. As we saw in those two case studies, there was still healthy demand for both houses. They were both right at about the median price point. Also, as we saw with these recent gains in the stock market, particularly tech stocks, they could really fuel demand in this market. I've seen it in past market cycles. People want to buy a bigger house, or they just want to invest in real estate when they have more value in their company stock. On the supply side, as rates continue to decline, there could very well be pent-up sellers that will come forward to sell. A couple of years ago, when rates were so low, they were able to get a really low interest rate. And so they've been just not incentivized to move. So now that rates are starting to come down, you might see some supply loosen up. Also, with these recent stock market gains, that could lead to more move up sales where the seller wants to get a bigger house. Maybe they have a growing family, or they just want more space. So the conclusions that I'm drawing are that demand will strengthen, and I predict that prices will start to rise in the new year. Now, supply may also start to increase as rates come down, and that could keep prices from rising too dramatically. But if you are looking to buy a house and you've been waiting on the sidelines because of these high rates, I highly recommend that you take some action, get your pre-approval letter in place with your lender, engage with a realtor to look for houses that meet your criteria, and be ready to move, because we saw this in January, at the beginning of 2023. Prices and demand just started to rise, and with the rates coming down this year, I can see that same cycle happening starting in January and February. As always, I have these free guides for you at the URL that you see on this slide. It's also in the description below this video. I have an updated seller's guide as well as a buyer's guide for winter of 2023. So it's got specific information for this period of time. I also have a first-time home buyer's guide that's got some great information if you're in the market to buy a house at this time. As always, reach out to me if you'd like a free consultation on buying or selling a home in the Silicon Valley real estate market. And if you found value at any point in this video, don't hesitate to hit that like, subscribe, and bell notification button. I'm Philip Ma from eXp Realty. I hope you have a happy holiday season, and I look forward to talking to you in the new year, 2024.